The Johannesburg Stock Exchange was a little changed this morning as investors digested the Federal Reserve's comments, which were less hawkish than expected. The rand, on the other hand, was slightly flat in early trade, pausing after a strong move higher on a Friday. The rand is now rallying well below the 15 rand mark. Trader and founder of Herenya Capital Advisors, Petri Redelinghuys, joins us now to unpack the latest market developments. Mr. Redelinghuys, a very good Monday to you. Taking a look at the rand, it appreciated past the 14 rand 70 against the US dollar, hovering around its strongest level since August the 11th. Talk us through the driving factors in this instance.
Good morning. So I think this is something that I think last week we chatted about this as well, where essentially the rand, well, is driven obviously by some local factors as well, but at this stage the world is very focused on continued stimulus by the Fed, and obviously over the weekend we had the Jackson Hole Symposium where we got some guidance around what at least the intention of the Federal Reserve Bank in the US is going to do with tapering of the current asset purchase program, as well as giving some guidance on what their plans are with interest rate hikes and so on. What we've seen during the last week is that the rand is more currently sort of being driven by the dollar. So as the risk in the overall market increases, aka there's this anticipation that monetary stimulus from the central bank in the US or Europe is going to slow down and interest rates are going to go up, people start buying looking for safety or safe places to move their money, and then obviously that goes into the US and that strengthens up the dollar, which has been putting us under quite a bit of pressure. And that has been quite a big theme over the last 2 years as this lockdown risk and the COVID sort of risks in the market increase. People tend to sort of run for safety, and emerging market currencies suffer. And as now currently as we're coming out of that lockdown situation and COVID is slowly coming under control, and we saw over the weekend some news, of course, from the Fed saying that they're ready to start the process for tapering, but the anticipation really is that tapering will only really start taking place in November, and we're likely to not see any interest rate hikes in the US until sort of first quarter or second quarter next year. In that case, risk on. People want to take risk, make investments in riskier assets because they feel there's still opportunity to do so, and that leads to inflows into emerging markets and, of course, outflows out of the dollar. And so as the dollar index sort of pairs back, the rand is strengthening up against that pair. So if we can get a couple more weeks of that, the rand probably continues to strengthen.
Now, take us through some of the havoc that Hurricane Ida is causing on the commodity space.
So the commodity space, there's not really that much sort of mining that's taking place in Louisiana. So I looked at sort of the three states that I think will be affected most, which is Louisiana, Kentucky, and I can't remember the name of the last one, sorry. But most of the commodities that are being mined in those regions are sort of sand, gravel, granite, inputs for cement and that kind of stuff. Nothing really too major. What it is going to do, though, is going to put up or push up energy prices, oil, natural gas, that kind of stuff. Obviously, there's some infrastructure stuff that's available there, and the first thing that you sort of go to is, well, what happens with Sasol? They've got a big chemicals plant in Louisiana. Is that affected? And by the look of things, it's not going to be that badly affected. It is mostly out of the way. It's a couple 100 kilometers away from where the cyclone is currently making landfall. It started making landfall yesterday. And it seems as though that Louisiana plant for Sasol is looking okay. If anything, what it could do is it could cause some supply chain disruptions in the energy space or in the oil space. So we probably see higher oil prices. Also, we'll see a spike in demand. Obviously, terrible weather is one factor for energy demand, but there is also a spike sort of in that recovery from that kind of thing. So there might be a bit of a spike in sort of energy demand, as well as a breakdown in some sort of supply chain distribution and that kind of thing. So we probably see higher oil prices on the back of this. In terms of, is our homebrewed Sasol going to be negatively affected? Probably not that much, no.
Now let's move to company news now. We see that Mass Real Estate has announced that it's resuming dividends amid tenant sales rising. Talk us through those results.
So those results are encouraging, I guess. I think let's start off with Mass Real Estate operates in sort of Central and Eastern Europe. They're busy disposing of their Western Europe assets, but Central and Eastern Europe is where their the property investments are concentrated. So I think it's important to put that into context because it's not necessarily representative of what's happening in South Africa, but more what's happening in Europe, right? Essentially what's happening is that life is sort of semi-going back to normal. Yes, there are still some restrictions. Yes, there's a lot of support that the real estate companies have made to their tenants. A lot of them have, sort of anti-eviction moratoriums put in place and that kind of stuff. So there is quite a bit of support that these real estate companies have had to give tenants. But we're starting to see a recovery, right? And a lot of these deals that these, with shopping malls and that kind of thing, a lot of the time the deals that they make is that rental is a sort of certain minimum plus a percentage of total revenue or turnover of whatever store is in that property or that location. So to see that those earnings starting to return is definitely a very good thing, and it's sort of encouraging to see that sorry, there's a colleague of mine taking a phone call. It's encouraging to see that they're returning their dividend because it means that they're feeling very confident in the recovery that they're seeing there. I think it's good news. I think it shows, in general, if I can sort of paint a macro picture to this, it shows that the other end of this COVID lockdown situation that we've been in for the last 2 years is starting to approach, and some semblance of normality is coming back. We're not quite there yet, but 92% occupancy according to Mass Real Estate. So, we're definitely making a lot of progress.
Now, let's turn our focus on Moody's now. They're saying that water infrastructure problems for Tshwane and restriction to supply by Rand Water may very well result in a credit negative rating for the city of Tshwane. Talk us through some of the challenges there.
Well, okay, so firstly, I don't think this is anything that's new. I suppose the fact that Moody's chimes in on it and says, well, look, we're going to give you a further sort of credit rating downgrade on the back of this is, I suppose, what is topical at the moment. But we've known for a very long time that the water infrastructure in Johannesburg and Pretoria and South Africa at large, but particularly sort of in Gauteng, is a major, major problem, and it needs to be addressed. It's sort of, I guess, interesting to see that it's become such a big problem now that we're starting to get water restrictions. We're starting to get all sorts of warnings around, look, guys, we need to reduce consumption, and we need to start paying attention to fixing this infrastructure. It's very, very old. It hasn't been maintained for the longest time, right? And the time has come to start fixing it because it's starting to really break down and starting to affect, everyday life and the amount of water that we can use. And obviously that is a risk to the economy as well as human life, right? And I think Moody's is now standing up or sitting up and saying, well, look, this risk is now so big that unless it's sort of resolved within the next 6 months, we're going to have to include it in our models and, give you a credit rating downgrade on the back of that. So it's not really all that surprising. I don't think it's going to make too much of a difference, from an economic standpoint. I think it just, well, unless the problem is not resolved, right? That is the most important thing. We have to, I suppose, as the people, put some pressure on it so we can create some political will to have this issue resolved as soon as possible. Because if we don't do anything about it, it's going to get worse. And, if it does get worse, what our rating is with Moody's is going to be the least of our problems, right? If we don't have any water, that's a much, much bigger problem.
Certainly a problem that has been going on for quite a long while now, Petri. But thank you very much for your insight this afternoon. That's Petri Redelinghuys, trader and founder of Herenya Capital Advisors on today's markets.